I have some important news to talk about, and it's all about something called the key interest rate. The Bank of Canada has just cut this rate by a half point, bringing it down to 3.75%. Now, I know that might sound a little complicated, but don't worry. I'm going to explain everything in the ways that make things simple and easy to understand. By the end of this, you'll know exactly what the key interest rate is and why this cut is happening, and how it might affect your life. So let's dive in and start with the basics. What is the key interest rate? Think of the key interest rate like the control switch for borrowing money. The Bank of Canada uses this rate to help control how much it costs for people and businesses to borrow money. When the Bank of Canada raises the key interest rate, borrowing becomes more expensive. But when they lower it, like they just did, borrowing becomes cheaper. So you ask, why does that matter? Well, borrowing money is a big part of how our economy works. People borrow money to buy homes, start businesses, or even make big purchases like cars. Businesses borrow money to expand, hire more people, and invest in new ideas. When borrowing is cheaper, more people are likely to do it. When borrowing is expensive, people might hold off on making big purchases or taking out loans. The key interest rate is one of the most important tools the Bank of Canada has to help keep the economy running smoothly. If the economy is growing too fast, the prices are going up too quickly, this is called inflation. The bank might raise the key rate to slow things down, but if the economy is slowing down and the people aren't spending or borrowing enough, the bank might lower the key rate to encourage more activity. So, why did the Bank of Canada decide to lower the rate by half a percentage point this time? To understand that, we need to look at what's been happening in the economy. Lately, people have been struggling with the cost of living. Groceries, gas, housing, everything has gotten more expensive. When prices go up like this, it's called inflation. Normally, the Bank of Canada would try to fight inflation by raising the interest rate, but there's more going on this time. Even though inflation has been high, the economy has been facing some other challenges too. People are spending less, businesses are having a hard time making money. Lowering the interest rate is a way to help out by making it cheaper for people and businesses to borrow money. The Bank of Canada hopes it encourages more spending. If people borrow more, they can buy homes, cars, and other big items, which helps businesses grow. And when businesses grow, they can hire more people, which is good for the economy. So, in short, the Bank of Canada cut the rate to 3.75% to make it easier for everyone to borrow money and to help the economy bounce back. The question is, how does that affect you? Now let's get to the part that matters the most. How does interest rate cuts might affect your life when the Bank of Canada cuts its key interest rate? It can have a big impact on things like mortgages, loans, and even credit cards. Here are a few ways you might notice the changes. Lower mortgage payments. If you already have a mortgage or you're thinking about getting one, this interest rate cut could mean you'll be paying less each month. If you have a variable rate mortgage, your monthly payments might go down. Variable rate mortgages are tied to the key interest rate, so when the Bank of Canada lowers the rate, your payments can go down too. If you're thinking about buying a home, this could be a good time to lock in a low mortgage rate. But keep in mind, if you have a fixed rate mortgage, your payments will stay the same. A fixed rate mortgage means you've locked in your rate for the set period, usually 5 years. So even though the key rate is going down, your fixed mortgage rate won't change until your term is up and you renew it. Whether you're looking to buy a car, start a business, or maybe even take out a personal loan, this lower interest rate is good news. With the key interest rate down at 3.75%, banks and other lenders might lower their rates too. This means you'll pay less in interest when you borrow money. Over time, they can save you a lot of money, making it easier to afford the big purchases or investments. Credit cards might become more affordable. Some credit cards have variable interest rates, just like some mortgages do. If you have a variable rate credit card, the interest rate you pay each month could go down because of this interest rate cut. While credit card interest rates are usually higher than other types of loans, every little bit helps when it comes to saving money. Businesses could benefit. If you run a business or you're thinking about starting one, this lower interest rate could make it easier for you to get a loan. Business often borrow money to buy new equipment, hire more workers, or expand their operations. Lower interest rates mean the businesses can borrow more cheaply, which could help them grow faster. So what happens next? Well, lowering interest rates doesn't fix everything right now. It will take some time before we start to see how this rate cut affects the economy. The Bank of Canada is hoping that by making it easier to borrow money, more people will spend and invest. When people spend more, it helps businesses to grow, and when businesses grow, the whole economy can improve. But we also have to remember that just because borrowing is cheaper doesn't mean people should rush out and take out too much debt. It's still important to be careful about how much you borrow. Lower interest rates can make it tempting to take out loans or buy bigger homes. It's always a good idea to keep sure you can afford those payments in the long run. No one wants to end up in a situation where they borrowed more than they can handle. You might be wondering, what happens next with the key interest rate? Will it keep going down? Or could it go back up again? That's a great question. The Bank of Canada doesn't just decide to raise or lower the key rate randomly. They carefully watch the economy to see how things are going. If inflation starts to get out of control again, the prices keep going up too fast, they might decide to raise the key interest rate to slow things down. But if the economy continues to struggle, they could keep the rate lower for a longer time. For now, though, the Bank of Canada hopes this rate cut will help by making it easier for people to borrow money. They want to give the economy the boost it needs to get back on track. So, how can you take advantage of these lower interest rates? Here are a few ideas. Refinance your mortgage. If you're currently paying a high interest rate on your mortgage, now might be the good time to talk to your bank about refinancing. Refinancing could help you get a lower rate, which means smaller monthly payments and more money in your pocket. Consider starting a business. If you've been thinking about starting a business, this could be a great time to take out business loan. With lower interest rates, borrowing the money you need to get started will cost you less, giving you better chance to succeed. Be smart with credit cards. If you have credit card debt, now might be a good time to pay it down. With lower interest rates, you can save money on interest charges and pay off your balance faster. Just remember to be careful about taking on more debt, even if the rates are lower. So let's sum it all up. The Bank of Canada just cut its key interest rates by a half a point, bringing it down to 3.75%. This is a big deal because it means borrowing money just got cheaper. If you have a variable rate mortgage or a loan, your payments might go down. If you're thinking about buying a home, starting a business, or making a big purchase, this could be a great time to take advantage of the lower rates. But remember, even though borrowing is cheaper, it's still important to manage your money wisely. Don't take on more debt than you can handle, and always think about your long-term financial goals. Thanks so much for watching. If you found this video helpful, make sure to click like and subscribe to stay updated for what's happening with the interest rates and how they can affect your money. Stay tuned for more videos like this.